This chapter follows our introduction to managerial accounting, and it is one of the ways we're going to use managerial accounting. The first thing that we need to know is that there are two ways that we can account for costs in a managerial company. The first way is that what this chapter is going to talk about is job order costing. And the second way, which is going to be chapter 20, is called process costing. And we're going to talk about what those differences are. So the definition for cost accounting systems is that it measures, records, and reports product cost. And we use these costs to set product prices, control operations, and develop our financial statements. So the first method, which is this chapter, is called the job order costing system. And what it does is it accumulates costs by job. A job is just the production of a unique product or a specialized service. It may be one unit or it may be a batch of units. So they're often used by companies that make products for customers. Some examples could be an apparel manufacturer such as Levi Strauss or a guitar manufacturer such as Gibson Guitars. So let's just say we're making guitars and that's our job because that's the example we've been using. We would use a job order costing because we have jobs that we can accumulate costs for. Now, if we were looking at a process costing, we go to it, okay, it accumulates costs by products because it's used for companies that make identical units like Pepsi Cola or paint. So they don't accumulate by job. Instead, they accumulate by process. So here are some examples of companies who use process cost systems. Some extra examples here. So when we're using a job order cost system, we're gonna record cost by jobs, and while the job's in the production process, it's going to be in WIP, work in process inventory, and then when the job is completed, it's going to go into finished goods, and when the finished goods are sold, it's going to go into the cost as part of cost of goods sold. And here is just a visual of this. So for making the guitar, raw materials, this would be in the storeroom. We're going to take wood, and once we put that into the production process, you're going to have direct labor, overhead, and materials inventory. And as it's being worked on, it's in WIP, and then when it's complete, it goes into finished goods, and then when it's sold, it goes into cost of goods sold. Okay, so in a job order cost accounting system, perpetual inventory controlling accounts and subsidiary ledgers are maintained for materials, for WIP, and for finished goods. So here is your materials inventory, your different types of raw materials you have. You have a different account for each. Then when it goes into WIP, it goes into WIP by the job number. And then when it goes into finished goods, it goes into finished goods by the job order. So the materials account in the general ledger is a controlling account, and then there's going to be a separate account for each type of material. So for your materials, it's an asset. It's going to increase with a debit. So as we get in materials, we're going to record it. Then as materials are requisitioned for jobs, we will credit it because it will move out of materials inventory. Okay, so here is materials information and cost flows. You can see that the supplier's invoice, we're going to get billed And when we get billed, we're also going to get a receiving report when we get those materials, and we're going to make sure that what we receive matches the invoice the supplier gave us. Then we're going to record it in the ledger. And then when we record it, when we receive it, we are going to credit it. Then after it's received and it actually is issued, that means we're moving it out of materials and putting it into a job. So you're going to have this materials requisition, and this is where the materials are called for a job. In other words, we say, hey, please give me 5 units of this so I can make these guitar. That's going to be a requisition. Okay. Then once those materials are requisitioned, they're going to get used on a particular job. So this is just kind of showing you the flow of the information. So a receiving report is prepared when the materials have been ordered, when they have been ordered or received and inspected. So this report's going to show how much we received and the condition the material is in when we receive it. So as I mentioned earlier, when the supplier's invoice is received, we're going to compare that to the receiving report to make sure there's no discrepancies, to make sure that what we ordered is what we got and it is in good condition. Once there are no discrepancies, we're going to record it. All right. So when you record it, you're going to debit materials and credit accounts payable to show that, hey, we got it and we owe for it. Okay, so this materials requisition is when they receive the storeroom where the materials are stored. They receive this. And this is where we're saying, hey, I need this amount of materials to be used in a job. That's called a materials requisition. For direct materials, the quantities and the amounts for material requisitions are posted to job call sheets. And these job call sheets make up the work in process in the subsidiary ledger. So they move out of materials inventory into work in process when they start being used on the job. So when we requisition materials, these are raw materials. Okay, when we requisition them into production, okay, we're going to requisition them or use them in production. We're going to have 2 types of materials that we are either going to have direct materials, which are materials we can trace, or indirect materials. That means we can't trace it. If you will go ahead and memorize right now, if you see something that's direct, all right, so this is going to be direct materials. If you see something that's direct, you're going to debit work in process. So you're going to credit materials because now it is no longer in materials inventory. So when you credit materials, that makes that inventory account go down and it makes WIP go up. So the computers update the materials inventory as storeroom employees release the materials into production. So it's no longer in materials, it's sitting into WIP. So here it says Hatch Company purchased 400 units of raw materials at $14 per unit. The materials were requisitioned for production as follows: 200 units for job 101 at $12 per unit, and 300 units for job 102 at $14 per unit. Journalize the entry on March 5th to record the purchase, and on March 31st to record the requisition from the materials storeroom. So when you purchase the materials, assume that it's always going to be on account unless it says paid with cash. But here it just says we purchased it. So you're going to debit materials and credit accounts payable for at cost, the 400 times 14. Then when the materials are requisitioned, we're going to credit materials and put it into work in process. So that's why we debit work in process. And they gave us the amounts to use, 200 times 12 and 300 times 14, because certain material was bought at different times, so the amount we pay for it can be different. So they're telling you here how much each one costs. We're going to add our total costs together. Debit work in process for the 6,600 and credit materials. So you may want to practice that and really familiarize yourselves with the journal entries for the purchase and then for the requisition of the materials. Alright, so factory labor. When employees report for work, they may use electronic badges, clock cards, or in and out cards to clock in. When an employee or employees work on an individual job, they're going to use time tickets to record the amount of time they have worked on a specific job. So here's just the different, this is job 71 time tickets. Okay, and the total labor cost. Direct labor for job 71, and then here's job 72. All the time sheets and the total labor. So when we go to put this into our journal, we would have total labor costs. Here it's going to be 11,000. Okay. And so what we're going to do is credit. Since this is direct labor, factory labor is direct labor, we're going to debit work in process. All direct labor goes into work in process. All indirect labor would be going into factory overhead. So debit WIP and credit wages payable because we need to pay our people. Now what we're used to seeing here is wages expense, a debit to wages expense, and a credit to wages payable, but we're not doing that because those are period costs. These are product costs. This labor went into making a product. So we're going to put it in the cost of that product, and it's not going to get expensed until we sell it. And when we do sell this product, it will get expensed into an account called cost of goods sold. So here's an example exercise for direct labor costs. So work this and practice the journal entry, check your answer, and in the next video we will talk about factory overhead.